Before we begin, a quick and important disclaimer. The information provided in this presentation is for informational and educational purposes only. I am not a financial advisor, real estate agent, or licensed professional. The real estate market involves significant risk, and you should always conduct your own research and consult with qualified professionals before making any financial or investment decisions. This video does not constitute financial or legal advice. The real estate agent you know today is an endangered species. They just don't know it yet. For decades, the entire process of buying or selling a home in America has been built on a foundation of inefficiency, gut feelings, and closely guarded information. You know the drill. You spend endless nights doom scrolling through Zillow or Redfin, clicking through 37 photos of a house that look amazing, only to show up and discover the pictures were taken with a fisheye lens 10 years ago and the cozy backyard is a concrete slab overlooking a freeway. You rely on an agent who tells you they have a good feeling about a neighborhood, or that a price is fair based on their experience. And for this privilege, for unlocking a few doors and handling some paperwork, they take a commission that can be tens of thousands of dollars. It's the single largest transaction of most people's lives, and we've been forced to navigate it with outdated tools and incomplete data, all while paying a fortune for the trouble. That entire broken system is about to be shattered. And it's not being broken by a new law or a market crash. It's being systematically dismantled by artificial intelligence. And here's the critical part you need to understand. This isn't some far-off, futuristic concept. It is happening right now, under the surface, and it is fundamentally rewriting the rules of how property is found, valued, and sold in the United States. The handful of people who understand this shift are about to gain an almost unfair advantage. The rest will be left wondering why their offers are always rejected, why their home sat on the market for 6 months, and why they overpaid by $50,000. The purpose of this video is to put you in that first group. We are going to pull back the curtain and show you the AI-powered playbook that is changing everything. Whether you're a first-time homebuyer terrified of making a mistake, a seller trying to maximize your single biggest asset, or an investor looking for the next hidden gem, you are about to learn how to leverage this technology to make smarter, faster, and more profitable decisions than ever before. We're talking about the ability to analyze deals with the power of a Wall Street hedge fund from your laptop, the ability to spot red flags in a property that even a seasoned home inspector might miss, and the ability to understand the true market value of a home with a level of accuracy that was previously impossible. So, forget everything you think you know about house hunting. The first pillar of the old system to crumble is the property search itself. For 20 years, we've been searching for homes the same way. We go to a website and we punch in filters: 3 beds, 2 baths, a certain square footage, a zip code. It's a rigid box-checking exercise. We're telling the computer what we think the solution looks like instead of describing the problem we want to solve. We're trying to fit our life into a set of database filters. Think about how fundamentally backward that is. You don't live your life in filters. You live in experiences. You want a home with a kitchen that gets great morning sun for your coffee. You want a quiet street where your kids can ride their bikes. You want to be within a 15-minute walk of a park because you have a new puppy. You want a home office that doesn't feel like a closet and has reliable high-speed internet because you work from home. Try putting that into the search bar on a traditional real estate site. You can't. The system isn't built for humans. It's built for databases. You end up compromising. You find the 3-bed, 2-bath, but it's on a noisy street. Or you find the quiet street, but the kitchen is dark and dated. You spend months trying to find a match, sifting through hundreds of listings that are technically correct, but emotionally and practically wrong. It's exhausting. Now enter AI. The new generation of real estate platforms are built on what's called natural language processing. This is the same technology that powers things like ChatGPT. It means you can talk to it like a person. Instead of filters, you just describe your perfect life. You can type, "Find me a 4-bedroom home in a family-friendly suburb of Denver. I need a fenced-in yard for my golden retriever, a modern kitchen because I love to cook, and it needs to be in a great public school district. Oh, and my wife is a light sleeper, so it can't be near a train line or a major highway." The AI doesn't just search for keywords. It understands intent. It cross-references property listings with school district ratings, noise pollution maps from the Department of Transportation, public transit schedules, cell service coverage maps, and even the angle of the sun at different times of day to determine which rooms get good morning light. It can analyze the text and listing descriptions to identify phrases like newly renovated kitchen, or perfect for entertaining. It can scan the photos to identify a fenced-in yard, or a modern gas stove versus an old electric one. Suddenly, you're not getting a list of 100 maybes. You're getting a curated list of 5, almost perfects. The AI has done the work of a dozen real estate agents in a matter of seconds. It has saved you from weeks of wasted weekends and frustrating property tours. This isn't a minor improvement. This is a complete paradigm shift. It's the difference between using a library's card catalog and using Google. One is a rigid manual system of finding what you already know exists. The other is a tool for discovery, for finding the perfect answer to a complex question you didn't even know how to properly ask. And this is just the tip of the iceberg. This is step 1. Because once the AI helps you find the property, it then begins to analyze it in ways that are even more powerful. It can pull every permit ever filed for that address to see if the finished basement was done legally. It can analyze satellite imagery over the past decade to see if that beautiful big tree in the backyard has roots that are creeping dangerously close to the foundation. It can even analyze local crime statistics, not just by the neighborhood, but by the block, and show you how it's trended over the last 5 years. You are no longer just buying a house. You are acquiring a complete, multi-layered data package on an asset. The information asymmetry that has defined the real estate industry for a century, where the agent and the seller know more than the buyer, is being vaporized. The playing field is being leveled, and the power is shifting directly to you, the consumer. But only if you know how to use these new tools. Because while the AI is giving you this incredible power, it's also giving it to the person you're bidding against. It's creating a new class of hyper-informed buyers and sellers. And the gap between them and everyone else is going to grow wider and wider. The question is, which side of that gap will you be on? To be on the right side of that gap, you have to understand that the game has fundamentally changed. The old rules of real estate, location, location, location. Buying the worst house on the best street, they're not wrong, but they are dramatically incomplete. They're like trying to navigate a superhighway using a map from 1950. The real advantage, the secret weapon in this new era, isn't just about having more information. It's about having the right information before anyone else. It's about seeing the future. And that's exactly what AI allows you to do. Let's start with the buyers. For decades, a home buyer's journey began with a public listing. A sign goes up in the yard, it hits the multiple listing service, it populates on Zillow and Redfin. And at that exact moment the race begins. You and dozens, sometimes hundreds of other people are all starting from the same line at the same time. It's a mad dash, a bidding war, a contest of who can pay the most, waive the most contingencies, and write the most heartfelt letter to the seller. But what if you could start the race before the starting gun even fired? What if you knew which houses were going to go on sale months in advance? This isn't science fiction. This is happening right now. AI platforms are scraping and analyzing billions of data points that signal a person's likelihood to move. We're not just talking about obvious things like job changes. We're talking about incredibly subtle, predictive indicators. Things like marriage licenses, because newlyweds often upsize. Divorce filings, a tragic but powerful predictor of a home sale. Birth announcements, a company in your town announcing a big round of layoffs. Even things as granular as the number of cars registered to an address suddenly dropping from 2 to 1, or a spike in Google searches from a specific neighborhood for moving companies or storage units near me. The AI takes all these disparate signals, these digital breadcrumbs we all leave behind, and weaves them into a probability score. This house, it might say, has a 78% chance of being listed in the next 90 days. This one 45%. This one over here 92%. A savvy buyer working with an agent who has access to this technology can now bypass the entire public market. They can identify the perfect off-market property, approach the owner with a fair, well-researched offer, and close the deal before a for sale sign ever touches the lawn. They avoid the bidding war entirely because there are no other bidders. They're not just winning the game, they're playing a different game altogether. Imagine a couple, let's call them the Millers. They've been trying to buy a home in a competitive Austin suburb for a year. They've been outbid 7 times. They're exhausted, demoralized, and ready to give up. Their agent, however, subscribes to one of these new AI platforms. The AI flags a 3-bedroom ranch house in their target neighborhood. The owners are in their late 60s. Public records show the house was paid off 8 years ago. Social media analysis shows their last child just graduated from college and moved to another state. And property permit data shows no major renovations have been applied for in over a decade. The AI synthesizes this. Empty nesters, no mortgage, no recent investment in the property. High probability of downsizing. The Miller's agent drafts a polite, personalized letter, explains they're a local family looking to put down roots, and includes a strong pre-approved offer. 2 weeks later, the deal is done. The Millers got their dream home, and the sellers avoided the hassle and commissions of a public listing. That isn't luck. That is a targeted, data-driven strategy that was impossible 5 years ago. Now flip the coin. What about sellers? For most people, selling a home means relying on a real estate agent's expertise to set the right price. That expertise is usually based on comps or comparable sales. The agent looks at what similar homes in the area have sold for in the last 6 months and bases your price on that historical data. The key word there is historical. It's a snapshot of the past. AI is changing this from a history lesson into a predictive science. AI-powered pricing models don't just look backward, they look forward. They analyze real-time market velocity. How many people are saving homes in your zip code on Zillow right now? What's the average number of days homes are sitting on the market this week? Not last quarter. Can even analyze sentiment. Is the online chatter about your neighborhood positive or negative? Has a popular blog just featured a local restaurant, causing a spike in interest? It ingests local economic data. Is a new company headquarters bringing 500 high-paying jobs to your town in the next year? Because that's going to impact demand in a way that last year's sales data can't possibly account for. Gets even more specific. These systems can analyze the visual data from millions of successful listings to tell you exactly how to stage your home for maximum impact. A traditional agent might say, neutral colors are good. An AI can say, listings in your price range that feature Benjamin Moore's Chantilly lace on the walls and have staged the spare bedroom as a home office instead of a nursery sell for an average of 4.7% more in 11 days faster. It can tell you that in your specific market, homes with drone photography and a virtual 3D tour get 60% more engagement online, and that engagement translates to more offers. Think about it. A seller in Phoenix is told by a traditional agent to list their home for $600,000 based on comps. But an AI-powered agent runs a different analysis. The AI identifies a massive recent surge in online searches for homes with a pool and solar panels, coming from California IP addresses. It also notes that homes of this seller's specific architectural style are trending on design-focused Instagram accounts. The AI recommends not just a higher price of $640,000, but a targeted digital ad campaign aimed specifically at users in Los Angeles and San Francisco who have shown interest in relocating and have searched for solar panel installers. The result? The home gets multiple offers from out-of-state buyers and sells for $675,000. That's a $75,000 difference. That's the power of moving from gut feeling to data-driven strategy. This brings us to the real estate agent themselves. For a century, the value of a great agent was in their experience, their network, their intuition, their feel for the market. That era is ending. The agent of the future, the agent who will survive and thrive, is not the one with the best Rolodex, but the one who is the best data scientist. The one who can wield these AI tools to provide their clients with a quantifiable, almost clairvoyant edge. The agent who tells you, I have a good feeling about this area, will be replaced by the agent who tells you, my model shows a 91% probability of price appreciation in this census tract over the next 18 months, driven by school rating improvements and a projected influx of tech sector jobs. One is an opinion. The other is a data-backed competitive advantage. This isn't about replacing humans with robots. It's about arming humans with intelligence that was previously unimaginable. It's creating a new class of super agent, and by extension super clients. The gap we talked about earlier isn't just about having access to Zillow. It's about having access to this new layer of predictive intelligence. So we've seen how AI is giving individual buyers and sellers an almost unfair advantage. It's an arms race, and the first to adopt the new weapons are winning. But what happens when the biggest players on the field, the giant institutional investors, the Zillows, the BlackRocks of the world, start pointing these same weapons, now supercharged with unlimited data and processing power, at the entire market? The game changes again. And the single-family home stops being just a home and starts becoming a single data point in the largest financial experiment in history. And like any experiment, it has its scientists, its laboratories, and its subjects. The scientists are the data analysts and Wall Street quants. The laboratories are the server farms humming away in undisclosed locations. And the subjects, well, the subjects are us. Our homes. Our neighborhoods. The American dream now itemized on a spreadsheet. To understand this experiment, you have to understand the tool that makes it all possible. It's a concept that has quietly crept into our lives. A piece of technology most of us have used without even realizing its true power. It's called an AVM, an automated valuation model. You probably know it by its most famous brand name, the Zestimate. For years, the Zestimate was a novelty, a fun digital Ouija board for homeowners. You'd type in your address and see a number pop up. Maybe you'd get excited. Maybe you'd get angry. You'd argue with your neighbors about whose Zestimate was more accurate. But it was just a number. A conversation starter. It didn't really mean anything. It was an estimate, a guess based on public records, square footage, last sale price, number of bedrooms. It was a digital reflection of the market, not a force within it. But then something changed. The AVMs began to learn. They weren't just fed public records anymore. They were fed everything. Absolutely everything. Think about the sheer volume of data that describes a single house, a single street, a single neighborhood. It's not just about the four walls of the building. The AI now knows the rating of the local elementary school, down to the decimal point. It knows the crime statistics not just for the zip code but for that specific block, updated daily. It scrapes data from social media to gauge neighborhood sentiment. Is there a new community garden being celebrated on Facebook? The AI knows. Is there a spike in noise complaints on the Nextdoor app? The AI knows that too. It knows the walking score to the nearest coffee shop. It knows the average commute time from that driveway to the nearest major business hub, calculated for 7:30 a.m. on a Tuesday versus 2 p.m. on a Saturday. It analyzes satellite imagery to measure the green space in a backyard, the age of a roof, and whether the neighbors maintain their lawns. It factors in zoning laws, future development plans pulled from city council meeting minutes, and even the projected impact of climate change on that specific parcel of land over the next 30 years. Every one of these data points, millions of them for a single city, are fed into the model. The AI doesn't just see a 3-bed, 2-bath house. It sees a complex asset with a quantifiable risk profile and a predictable future value. It can price a home with a speed and a supposed precision that no human appraiser could ever match. And with this new power, a new kind of company was born. The iBuyer. Instant buyer. Companies like Opendoor, OfferPad, and for a time Zillow itself. Their promise was seductive. Why go through the hassle of listing your home, staging it, dealing with open houses and fickle buyers? Just go to our website, type in your address, and our algorithm will give you a cash offer in 24 hours. Frictionless. Simple. The Amazon Primification of real estate. They weren't just using AI to value homes, they were using AI to buy them. Thousands of them. Tens of thousands. They were turning the entire real estate market into a high-frequency trading desk. Their AVMs weren't just estimating value. They were placing bets, billions of dollars in bets, all guided by the cold, hard logic of the algorithm. And this created a bizarre and dangerous feedback loop. See, a traditional market is based on human actors making imperfect, emotional decisions. A house is worth what someone is willing to pay for it. But what happens when the biggest someone in the market is an algorithm buying thousands of homes? The algorithm stops predicting the market. It starts becoming the market. If an iBuyer's AI decides that homes in a certain Phoenix suburb are undervalued by 3%, it can deploy millions in capital overnight to buy up inventory. This sudden demand drives up the prices in that neighborhood. Then the algorithm looks at this new sales data, the very sales it created, and confirms its original hypothesis. See, it says, we were right. Prices are going up. It's a snake eating its own tail. And this brings us to the most spectacular failure in this entire experiment, Zillow. Zillow, the company that pioneered the public-facing AVM. They had more data than anyone. They had the brand recognition. They decided to jump into the iBuying game to put their money where their algorithm was. They called it Zillow Offers. And it was a catastrophe. In late 2021, they slammed the brakes on the entire program, laid off a quarter of their staff, and announced they were writing off over $500 million in losses. $500 million. They had bought thousands of homes that their own Zestimate said were great deals, only to find themselves stuck with properties that were worth less than they paid. So what went wrong? How could the most data-rich real estate company on the planet get it so disastrously wrong? The simple answer is that their algorithm was too optimistic. It was programmed to predict that home prices would always go up, and it got caught when the market started to cool. But the real story is more complex and far more telling. Their AI was brilliant at pricing a house in a stable, predictable market, but it was terrible at predicting human chaos. It couldn't account for a sudden shortage of contractors to fix up the homes they bought. It couldn't predict the exact whims of a buyer who walks into a house and just doesn't like the vibe. The model was designed for a world that runs on clean data and logical rules, but the real world is messy, emotional, and unpredictable. Zillow's AI was a genius on paper but a fool in the real world. The failure of Zillow offers was seen by many as a victory for the little guy, a sign that Wall Street's algorithms couldn't conquer the American neighborhood. But that's a dangerously naive conclusion, because Zillow's failure wasn't a failure of the AI model itself. It was a failure of their specific business model. They were trying to be house flippers, aiming for quick profits on thin margins. But another, quieter group of players was watching. They had a different strategy, and their AI was built for a different purpose. These weren't tech companies trying to be traders. These were the largest private equity firms and institutional investors in the world. Firms like Blackstone. They weren't interested in flipping homes for a quick buck. Their goal was far more ambitious and far more permanent. They didn't need an algorithm that could predict the sale price of a home in the next 90 days. They needed an algorithm that could identify which neighborhoods would produce the most reliable rental income over the next 30 years. They weren't buying houses. They were buying cash flow assets. They were converting single-family homes, the bedrock of American communities, into a new financial instrument, no different than a stock or a bond. And their AI wasn't just looking at individual houses. It was analyzing entire communities, entire cities to find the ones that perfectly matched their investment thesis. A growing population of people who were being priced out of buying and would therefore be forced to rent forever. While Zillow was losing a fortune trying to predict the market, these institutional giants were using their far more sophisticated AI to methodically remake the market in their own image. They let the iBuyers make all the noise and all the mistakes, while they quietly executed a long-term strategy. They weren't placing bets. They were buying the casino. So the AI isn't just predicting the price of a house anymore. It's predicting the future of a community. It's deciding which neighborhoods are worthy of investment and which are to be left behind. It's sorting us into columns: homeowners and renters, assets and liabilities. And if your neighborhood doesn't fit the algorithm's profit model, what happens to you? What happens to you is a quiet, almost invisible process. It's not a letter in the mail or a sign posted on your street corner. It's a decision made in a server farm hundreds of miles away, by a model that has never seen your freshly painted fence or the new playground the community built. That model looks at decades of data, property values, loan defaults, school ratings, crime statistics, even the average credit score of your neighbors, and it draws a line. Not on a paper map, but a digital one. A line that separates the high-growth potential zones from the stagnant or high-risk ones. This is the birth of digital redlining. The term redlining comes from a dark chapter in American history. In the 1930s, the federal government created maps of cities across the country, color-coding neighborhoods to indicate their perceived lending risk. Affluent white neighborhoods were colored green and blue, deemed desirable. Minority neighborhoods, particularly black communities, were colored red, and systematically starved of mortgage lending and investment for decades. It was a policy that explicitly segregated America and created a wealth gap that persists to this day. Today, no human is sitting in a room with a red pen. They don't have to. The artificial intelligence does it for them, only with far more precision and a terrifying veneer of objectivity. The AI isn't programmed to be racist. Its programmers would be horrified at the suggestion. But the AI is programmed to do one thing above all else: learn from the past to predict the future. And what is the past of American real estate? It's a history riddled with the data scars of segregation, biased lending, and systemic inequality. When you feed an AI a diet of poison data, it learns to be a poisoner. The algorithm learns that certain zip codes, historically redlined, have had lower rates of property appreciation. It learns that residents in these areas have, on average, lower credit scores, not because they are less responsible, but because they've been denied access to wealth-building credit for generations. It sees a correlation between these factors and what the institution considers risk. So the AI draws its own red line. It advises the multi-billion-dollar investment fund to buy up thousands of homes in the suburbs, but to avoid your city block entirely. It tells the automated mortgage underwriting system to flag applications from your neighborhood for extra scrutiny, or to offer them higher interest rates to compensate for the perceived risk. Let's imagine a family, the Jacksons. They've lived in their home for 20 years. They've paid their mortgage on time every time. Their neighborhood is a tight-knit community, but it's one of the areas that the algorithms have silently flagged. A large institutional investor, guided by its AI, buys the 2 houses for sale on their street. But they don't buy them to flip. They buy them to rent. The AI has calculated the perfect rental price to maximize profit. A price that's 30% higher than the local average, but just low enough to be filled by people desperate for housing. Slowly, the character of the neighborhood changes. More houses are sold to these faceless corporate landlords. The ratio of homeowners to renters shifts. The AI models used by other investors see this shift. A higher percentage of renters is often correlated in historical data with lower property value growth. So now the neighborhood is flagged as an even higher risk. It's a self-fulfilling prophecy written in code. When the Jacksons decide they want to take out a home equity loan to pay for their daughter's college tuition, their application is denied. Their personal finances are perfect. But the automated system that their bank uses has ingested the data. It sees a neighborhood with slowing appreciation, high renter-to-owner ratio, and a risk score that just crossed a critical threshold. The computer says no. No human ever looks at it. There is no one to appeal to. How do you argue with an algorithm? How do you tell a string of code about the new community garden or the neighborhood watch that keeps everyone safe? You can't. The data has spoken. This is happening at scale. AI is creating investment deserts in the heart of our cities. It's building invisible walls around communities, starving them of the capital they need to thrive. And the most insidious part is that it all appears to be fair. It's data-driven. There's no human bias to point to, no smoking gun of discrimination. The companies can hold up their hands and say, "We don't make the decisions, the algorithm does." It's just math. But it's not just math. It's the ghost of our past, resurrected as code. It's a system that launders historical bias, repackaging it as a smart financial strategy. It's a way to perpetuate inequality while claiming complete impartiality. The result is that the American dream of homeownership, the single greatest engine of generational wealth for middle-class families, is being algorithmically denied to entire communities. The wealth gap isn't just being maintained, it's being automated. It's being coded directly into the foundation of our 21st century economy. This process isn't just affecting who gets a loan or where an investment fund buys houses. It's fundamentally changing the very meaning of value in real estate. The worth of a home used to be tied to the community, the quality of the schools, the proximity to parks, the human elements that make a place desirable to live. Now, its value is increasingly determined by its data profile, how it fits into a predictive model, its potential for short-term rental yield, its liquidity as a tradable asset in a global portfolio. Your home is becoming just another cell in a massive spreadsheet. And the person who owns the spreadsheet is the one who sets the rules. We are witnessing a tectonic shift, a transfer of power from individuals and communities to algorithms and the institutions that wield them. This isn't a distant, dystopian future. It's the invisible architecture of the market right now. It's a system that is quietly, efficiently, and relentlessly sorting America, creating a new form of digital segregation that is harder to see and even harder to fight. But what if this very same technology, this incredible power of prediction and analysis, could be turned on its head? What if the same code that builds these walls could also become the key to tearing them down? Because on the other side of this algorithmic gatekeeping, a different kind of revolution is brewing, one that promises to put the power of data not in the hands of the few, but into the hands of the many. A revolution aimed directly at the individual home buyer and seller. This new battlefront in real estate isn't being waged in corporate boardrooms or on Wall Street trading floors. It's happening on your laptop, on your phone, in the palm of your hand. For decades, the average American home buyer has been at a massive information disadvantage. You had the listing photos, the agent's description, and maybe a Zestimate that felt like it was pulled out of thin air. You were essentially flying blind, armed with emotion and a pre-approval letter, going up against a market full of professionals who had access to data and insights you could only dream of. That era is over. The revolution is the democratization of real estate data, and artificial intelligence is its engine. Think about how you search for a home right now. You go to a major portal, you plug in your filters, 3 beds, 2 baths, a certain zip code, a price range. You are, in effect, telling the computer what you think you want based on a limited set of options. But what if the computer could understand what you actually want, even if you can't perfectly articulate it? This is the first major shift. New AI-powered search platforms are moving beyond rigid filters and into the realm of natural language and sentiment. You can now type in a search query that sounds more like a conversation with a friend. Find me a quiet, family-friendly house in the suburbs of Denver with great morning sunlight, a yard big enough for a German Shepherd, and a kitchen that's good for entertaining. An old system would just crash. It wouldn't know what to do. But an AI understands the nuance. It translates quiet by cross-referencing the property with traffic density maps, proximity to flight paths, and even noise pollution data. It identifies family-friendly by analyzing school district ratings, the number of nearby parks, and local crime statistics. For great morning sunlight, the AI doesn't just look for the word bright in the description. It analyzes the orientation of the house on the map and uses topographic data to see if there are hills or large buildings that would block the sun. It can even scan the photos, identifying the size and direction of windows to model how light will fill the rooms throughout the day. A yard for a German Shepherd means it's not just looking for any yard, but one with a secure fence, which it can often identify from satellite imagery or photos. A kitchen for entertaining triggers an analysis of photos for open-plan layouts, large islands, and modern appliances. This is no longer a search, it's a consultation. The AI becomes your personal scout, sifting through thousands of listings to find the handful that match the feeling you're looking for, not just the specs. But finding the right house is only the first part of the puzzle. The second and arguably more important part is knowing if it's a good investment. This is where AI is giving individual buyers a power that was once reserved for billion-dollar hedge funds. We're talking about predictive analytics for the masses. For years, the best we had was a simple estimate of a home's current value. Now, AI can forecast its future value with terrifying accuracy. These new platforms don't just look at past sales in the neighborhood. They ingest a staggering amount of data. They analyze macroeconomic trends like interest rate forecasts and inflation. They track hyperlocal data, like the number of building permits being issued nearby, a sign of investment and growth. They scrape public records from city planning departments to see if a new park, a new subway line, or a new Whole Foods is planned for the area. All things that can dramatically increase property values. They can even factor in more abstract data. Some AI models are now incorporating climate risk, projecting the long-term financial impact of increased flood, wildfire, or hurricane risk on a specific property's value and insurance costs 30 years from now. Imagine you're looking at two nearly identical houses. One is projected to appreciate by 25% over the next 5 years. The other, just a few miles away, is projected to appreciate by 40% because the AI has identified that its school district is on a sharp upward trend, and a major tech company just signed a lease for a new campus 2 towns over, which will create thousands of high-paying jobs and a surge in housing demand. Which house do you choose? For the first time, you can make that decision with the same level of data-driven confidence as a professional investor. It's like having a crystal ball for the biggest purchase of your life. Let's make this real. Picture a young couple, we'll call them Mark and Jessica, trying to buy their first home in the brutally competitive market of Austin, Texas. They're overwhelmed. Every open house is a mob scene. Every home they like has 10 other offers by the end of the day. They're on the verge of giving up or just settling for whatever they can get. Then they start using a new AI-powered home buying platform. Instead of typing in 3-bed, 2-bath, they tell it their story. We're in our early 30s, we both work from home, we love hiking and live music, and we're planning to start a family in a couple of years. We want a place with character, but we're terrified of making a bad financial decision. The AI goes to work. Work from home means it prioritizes listings with a dedicated office space or a floor plan that allows for one, and it downgrades properties on loud, busy streets. Loves hiking means it maps every listing's proximity to trailheads. Live music means it calculates the drive or transit time to Austin's famous music venues. Planning a family means it heavily weights the quality and trajectory of the local school district. And terrified of a bad financial decision is the master command. The AI doesn't just look for houses they can afford now. It runs thousands of simulations on each potential property, forecasting its appreciation, property tax changes, and potential resale value. The platform ignores the trendy, overpriced neighborhoods everyone else is fighting over. Instead, It presents them with 3 options in an up-and-coming area they'd never even heard of. One house in particular catches their eye. It's charming, has a great layout, and is listed at the very top of their budget. But the AI provides a crucial piece of information. It has flagged a public city council document from 3 weeks ago, approving the rezoning of a nearby defunct shopping mall into a massive mixed-use development with green spaces, restaurants, and a new light rail stop. The AI projects that this single development will likely increase property values in a half-mile radius by 15 to 20% within 3 years. It's a hidden gem, a pocket of future value that hasn't been priced into the market yet. Mark and Jessica now have an informational edge. They're not just buying a house based on emotion. They're making a strategic investment based on data nobody else is looking at. They put in a confident offer, and they get the house. They didn't just buy a home, they bought a future. This is the power that is now being handed to the consumer. The AI acts as your tireless analyst, your data scientist, your strategic advisor. It can pull every permit ever filed for a property to see if that beautiful new deck was built to code. It can analyze the wording of the listing description to detect sentiment. Is the seller using confident language? Or are there subtle hints of desperation that might give you leverage in a negotiation? It can create a comp report, a comparison of similar sold properties, that is infinitely more sophisticated than what was possible before, adjusting for specific features like a renovated kitchen or a new roof with a precision that was previously impossible. Of course, this brave new world isn't without its own set of risks. How much of our personal data are we feeding these platforms? When you tell an AI your life story, your financial situation, and your deepest desires for your future, you're creating a data profile of immense value. And what happens if the algorithm is flawed? What if its projection is wrong, and it leads you to make a poor investment? The potential for analysis paralysis is also real. You can get so lost in the data that you forget the human element of buying a home you actually love. The machine is a powerful tool, but it is not infallible. But this is only half of the equation. For every AI-empowered buyer scrutinizing a property down to the last data point, there's a seller on the other side, now armed with their own arsenal of intelligent tools designed to do one thing: get the absolute highest price. And how they're doing it is changing the game entirely. For generations, the process of selling a home was steeped in a kind of folk wisdom. You'd hire a local agent, someone who knew the neighborhood. They'd walk through your house, nod thoughtfully, and pull a number out of the air based on a mix of experience, gut instinct, and a handful of recent sales down the street. It was more art than science. A little bit of guesswork, a little bit of luck. That entire paradigm is being dismantled piece by algorithms that don't have gut feelings and never, ever guess. The modern AI-powered seller isn't just listing a house, they are launching a product. And the first step in any successful product launch is pricing. Forget looking at the 3 houses that sold last quarter. A seller's AI platform ingests thousands of data points in real time. We're talking about the daily fluctuation in mortgage rates, the number of Google searches for homes for sale in your specific zip code, local building permits, school rating changes, even the stock performance of the largest local employer. It's analyzing the digital pulse of your community to understand demand not as it was, but as it is right this second. The result isn't a single static price. It's a dynamic pricing strategy. The AI might advise, list at $599,000 on Thursday at 3 p.m., just as people are mentally checking out from work for the weekend. Based on the current search volume, we anticipate high traffic. If we get more than 2,000 views on Zillow but fewer than 5 showing requests in the first 48 hours, we will automatically adjust the price to $595,000 on Saturday evening to trigger a new wave of alerts to potential buyers. Think about that. It's like having a Wall Street trading algorithm for your front door. It's not just setting a price, it's playing the market, making micro adjustments to find that perfect equilibrium where buyer desire meets maximum value. But finding the right price is useless if the right people don't see it. This is where the second revolution is happening: marketing. The old way: a sign in the yard, a spot on the multiple listing service, and maybe an ad in the local paper. It was a shotgun blast, hoping to hit a target. AI marketing is a sniper rifle. Before the home is even listed, the AI builds a detailed profile of the ideal buyer. It analyzes the property's unique features: a large home office, a fenced-in yard, proximity to a specific charter school, a walk-in pantry, and scours vast consumer datasets to find people whose online behavior indicates they value those exact things. It knows who has been browsing for homes in your price range, who has been saving photos of kitchens that look just like yours on Pinterest, whose mortgage pre-approval just came through. Then it executes a hyper-targeted ad campaign. Your home's listing doesn't just show up for everyone. It appears in the social media feeds of a 34-year-old remote software engineer who has been searching for homes with dedicated office space. It pops up as a sponsored post for a young family that just followed 3 local parent groups on Facebook. The AI can even A/B test the listing photos, showing one group of potential buyers the sunny backyard and another group the cozy fireplace, tracking which image gets more clicks, and then optimizing the main listing photo in real time to maximize engagement. It's a level of marketing precision that was once reserved for Fortune 500 companies, now being used to sell a 3-bedroom colonial in Ohio. This intelligence extends inside the home too before it ever hits the market. A seller can now use AI-powered tools that analyze photos of their current space and provide a detailed, high return on investment renovation plan. This isn't generic advice like, update the kitchen. It's incredibly specific. The AI will say, painting the living room walls agreeable gray by Sherwin-Williams and refinishing the hardwood floors to a natural oak color has shown an average $8,000 increase in final sale price for homes of this style in your area. The total cost for this project is estimated at $2,200. It takes the guesswork out of pre-sale improvements, turning them into a calculated investment. And what about staging? The days of spending $10,000 to rent furniture for a few months are numbered. AI can now generate photorealistic virtual staging. It can take a photo of an empty room and in seconds create a dozen different versions. One styled as a sleek, minimalist office, another as a warm, inviting nursery, and a third as a high-tech media room. These images are then used in the online listing, allowing different buyers to literally see themselves and their own lifestyles in the space, dramatically increasing the emotional connection to a property they've never even set foot in. Finally, the moment of truth arrives: the offers. In a hot market, a seller might get 5, 10, even 20 offers. In the past, this was an overwhelming spreadsheet of numbers, names, and conditions. Now, an AI can parse every single offer document in an instant. It doesn't just look at the offer price. It analyzes the fine print. It assesses the risk of each offer based on the type of financing, the size of the down payment, the number of contingencies, and even the historical closing rate of the buyer's loan officer and real estate agent. The AI then presents the seller with a simple color-coded dashboard. It'll say, Offer A is the highest at $610,000, but it has a financing contingency with a lender known for delays. We rate its close probability at 75%. Offer B is for $605,000, but it's an all-cash offer with no contingencies and a 14-day close. Its close probability is 99%. The AI calculates the net expected value of each offer, factoring in the financial risk of a deal falling through and the property having to go back on the market. It removes emotion and anxiety from one of the most stressful decisions a seller has to make, replacing it with pure, unadulterated data. What this all amounts to is a profound power shift. For the individual homeowner, these tools are a great equalizer. They allow a regular person to leverage the same level of data analysis and marketing sophistication as the largest institutional investors. It's about maximizing the value of what is, for most Americans, their single largest asset. But it also raises the stakes for everyone. The market becomes more efficient, more competitive, and more ruthless. Every property is being pushed towards its absolute, data-verified peak value. So now we have this incredible technological arms race. On one side, you have the AI-powered buyer, scanning the nation for the slightest inefficiency, the slightest hint of an undervalued gem. On the other, you have the AI-powered seller, using a formidable suite of tools to ensure not a single dollar of equity is left on the table. They are two digital gladiators, circling each other in an arena made of data. But standing between them, right in the middle of this algorithmic battlefield, is a human, the real estate agent. In a world where AI can price, market, and even negotiate a sale, what happens to them? Are they destined to become obsolete, a relic of a bygone era? Or has their job, against all odds, just become more important than ever? The answer, like everything touched by this technology, is not a simple yes or no. It's a profound, fundamental transformation. To understand it, we first have to accept a hard truth. A huge portion of what real estate agents have traditionally done is, without a doubt, being automated into oblivion. Let's be brutally honest. The comparative market analysis, or CMA, That thick packet an agent would spend hours compiling to determine your home's value? An AI can now run 1,000 more complex comparisons, factoring in everything from historical sales data to local economic indicators and even the sentiment of social media posts about your neighborhood, and it can do it in about 7 seconds. Writing a compelling listing description? A generative AI fed the basic facts of a property can spit out 10 different versions, each tailored to a specific buyer demographic, from the young family needing a yard to the empty nester looking to downsize. It can write it in the style of a luxury magazine, a cozy storybook, or a straight-to-the-point investor pitch. Professional photography? AI can now take a few smartphone pictures and, through a process called neural radiance fields, generate a fully immersive 3D virtual tour that's more realistic than any video. Marketing? Forget putting an ad in the local paper. AI-powered platforms can identify the 20 people in your city most likely to buy your specific house, based on their online browsing history, their income level, their family size, even the car they just bought, and serve them targeted ads on their phones before they even know they're looking. Scheduling showings, answering basic questions via chatbot, handling the mountains of paperwork, even reviewing contracts for errors and omissions, AI is not just capable of these tasks. It's better, faster, and cheaper at them than any human could ever hope to be. When you stack all of this up, the case seems closed. The traditional agent, the one who was the gatekeeper of information and the manager of processes, looks like a horse and buggy driver staring at the first Model T rolling off the assembly line. The end seems not just inevitable but imminent. But that's where the story gets interesting. Because buying or selling a home has never just been about information and process. If it were, Zillow would have replaced agents a decade ago. It's the single largest financial transaction of most people's lives. It's not like buying a stock or a new phone. It's deeply, profoundly emotional. And in the realm of emotion, nuance, and high-stakes human interaction, AI still has the intelligence of a rock. Think about the first-time homebuyer, terrified of making a multi-$100,000 mistake. An AI can show them data on interest rates and property value trends. It cannot, however, look them in the eye and say, "I understand you're scared. We're going to walk through this step by step together." It can't sense the hesitation in a buyer's voice or notice the way a couple's eyes light up when they walk into a specific kitchen. This emotional intelligence, this ability to act as a guide, a therapist, and a trusted advisor, is not a soft skill. It is the core value proposition in a transaction defined by anxiety and aspiration. Then there's the hyperlocal, almost invisible knowledge that separates a good agent from a great one. An AI can scrape every database on the planet. It knows the school ratings, the crime statistics, the property tax records. But it doesn't know that the coffee shop on the corner is the heart of the community, where all the neighbors gather on Saturday mornings. It doesn't know that the city council just quietly approved a zoning change for that empty lot at the end of the block that's going to drastically change traffic patterns in 2 years. It doesn't know that the seller of the house you love is going through a difficult divorce and is more motivated by a quick, clean close than an extra $10,000. This is the dark data of real estate, the human and community context that no algorithm can capture. It's the knowledge that comes from living and breathing a community, from having kids in the local schools, from building relationships over years. And what happens when things go wrong? Because in real estate, things always go wrong. The inspection uncovers a major issue with the foundation. The appraisal comes in $20,000 below the agreed-upon price. The buyer's financing falls through at the last minute. An AI can report these facts. It can present you with a list of potential outcomes based on statistical probability. But a great human agent becomes a creative problem solver. They don't just report the problem, they orchestrate the solution. They have a structural engineer they've trusted for 15 years who can be there tomorrow. They have the negotiation skills and the relationship with the other agent to find a way to bridge the appraisal gap. They have a list of 3 other mortgage brokers who can work miracles on a tight deadline. The agent in these moments isn't a salesperson. They are a conductor, a crisis manager, a project lead for an incredibly complex, high-stakes, and personal project. So no, the real estate agent is not going extinct. But the real estate agent as we've known them for the last 50 years is already gone. The future, the new paradigm, is the rise of the augmented agent, or Agent 2.0. This is not a human versus the machine. It's a human empowered by the machine. The agent of the future will offload 80% of their administrative and analytical busywork to their AI assistant. The AI will run the market analysis, write the first draft of the listing, schedule the tours, and manage the marketing campaigns. This doesn't make the agent obsolete. It makes them more human. By freeing themselves from the mundane, they can double down on the skills that truly matter, providing expert counsel, building deep relationships, creatively solving complex problems, and masterfully negotiating on behalf of their clients. Their role shifts from a gatekeeper of information to an interpreter of it. They become less of a project manager and more of a strategic wealth advisor, helping clients not just buy a house, but make one of the most important investment decisions of their lives. The successful agent of tomorrow won't be the one who fights against AI. They will be the one who leverages it most effectively to amplify their uniquely human strengths. They will be the ones who use AI-driven insights to provide a level of service and strategic advice that was previously unimaginable, combining machine-level data processing with human-level wisdom and empathy. They become bionic in a sense. The agent's brain, their experience, their relationships, supercharged by the most powerful analytical tool ever created. This evolution creates a massive divide. Agents who adapt will become more valuable and successful than ever before, while those who don't will simply vanish. But this personal evolution of the agent is only one half of the equation. It begs a much bigger, more disruptive question. If individual agents are becoming these AI-powered, hyper-efficient solo entrepreneurs, what does that mean for the massive traditional real estate brokerages they work for? The Keller Williams, the Remax, the Compass of the world? These giants, with their tens of thousands of agents, their massive office buildings, and their old-school commission split models, are they about to become the dinosaurs in this new technological ecosystem? The short answer? It's complicated. The long answer is that we are witnessing the single greatest strategic pivot in the history of the residential real estate brokerage. To call them dinosaurs is to misunderstand the situation. They aren't waiting for the asteroid. They're building spaceships. The real question isn't if they'll become extinct, but what they will have to become in order to survive. For decades, the value proposition of a large brokerage was built on a few key pillars. First, brand recognition. A sign from a nationally known company in your front yard was a seal of quality, a promise of professionalism. Second, resources. They provided the office space, the printers, the legal support, and the marketing templates. Third, and most importantly, they provided the network, the access to other agents, the multiple listing service, and a steady, if sometimes unreliable, stream of leads. In exchange for this, they took a significant slice of every commission, a model that has remained largely unchanged for 50 years. Now imagine an AI-powered sledgehammer hitting each one of those pillars one by one. Let's start with resources. Why does an agent in 2024 need a physical office? Their real office is their car, their laptop, their smartphone. AI now automates the paperwork that used to pile up on those office desks. AI contract writing tools can draft offers and addendums in seconds, with built-in compliance checks that reduce the need for a managing broker to look over every single line. Marketing. An agent can now use AI to generate a dozen different social media campaigns, complete with video scripts, targeted ad copy, and analytics, all before their morning coffee is finished. The physical infrastructure of the big brokerage is rapidly shifting from an asset to an expensive, overhead-heavy liability. Next, the network and the leads. This pillar has been crumbling for years thanks to Zillow and Redfin, but AI is the demolition charge. Brokerage-provided leads were often cold, poorly qualified, and distributed among dozens of hungry agents. Today, AI platforms can analyze thousands of data points, social media activity, search history, life events like a new job or a new baby, even credit data, to predict who is most likely to buy or sell a home in the next 90 days. These platforms don't just provide a name and a number. They provide a complete dossier, a behavioral profile, and even suggest the perfect marketing message to connect with that specific person. An independent agent with the right AI subscription can now generate higher quality leads than a top producer at a legacy firm could a decade ago. The brokerage's well is running dry because agents are digging their own deeper wells. Finally, the most sacred pillar of all, the brand. In an era of hyper-personalization, the power is shifting from the corporate brand to the agent's personal brand. A buyer or seller today isn't just looking for Remax. They're looking for Jane Doe, the agent who is the undisputed expert on their specific neighborhood, proven by her AI-driven content marketing that seems to be everywhere they look online. AI allows a single agent to build a media empire around themselves. They can host a podcast with AI-generated transcripts and show notes, run a YouTube channel with AI-edited videos, and publish a neighborhood-specific blog with AI-researched articles. Their personal brand becomes the signal of trust, eclipsing the corporate logo on their business card. When you see the pillars cracking like this, the extinction theory seems pretty plausible. The brokerage model, which is essentially a franchise system for real estate services, starts to look incredibly bloated and inefficient. Why would a top-producing agent give up 30, 40, or even 50% of their hard-earned commission to a brokerage whose core services are being replicated, and in many cases surpassed, by software that costs a few $100s a month? This is the existential threat. This is the moment where the dinosaurs are supposed to look up at the sky and see the fiery rock. But they aren't. Because the smartest of these giants, the Compasses, the EXPs, the Keller Williamses, saw this coming. They understood that their future survival depended on one thing: owning the technology. They realized they could no longer be a real estate company that uses tech. They had to become a technology company that sells real estate. And so began the great AI arms race. These companies are now pouring hundreds of millions of dollars into building proprietary, end-to-end AI platforms for their agents. The goal is no longer just to provide value, but to create an inescapable technological ecosystem. The new pitch isn't, "Join us for our brand recognition and office space." The new pitch is, "Join us for our platform, an AI-powered Iron Man suit that will make you an unstoppable super agent, and which you cannot get anywhere else." Take Compass, for example. They didn't position themselves as another brokerage. From day one, they called themselves a real estate technology company. They built a platform that uses AI and machine learning to help agents with everything from pricing a home to marketing it, to managing the entire client relationship. They're likely to sell feature analyzes data to predict which homes in an agent's network are most likely to hit the market, allowing their agents to make contact at the perfect moment. This isn't just a tool. It's a competitive moat. Keller Williams invested over $1 billion to create Command, their own AI-powered CRM and marketing platform. It integrates everything an agent needs into one system, powered by an AI assistant named Kelly. It's an attempt to create a walled garden, an ecosystem so powerful and so convenient that agents would be at a significant disadvantage if they were to leave. These giants are leveraging their one massive advantage: scale. A solo agent or a small boutique brokerage can't afford to build a proprietary AI engine from scratch. They can subscribe to off-the-shelf AI tools, but the big brokerages are building something different. They are integrating their own vast, internal data, decades of transaction histories, client information, and agent performance metrics, with public data and sophisticated AI models. This creates a data feedback loop that makes their platform smarter and more predictive with every single transaction that occurs within their network. The very nature of the brokerage is being redefined. The commission split is no longer just a fee for services rendered. It's becoming a subscription fee for access to a game-changing technology platform. They are transforming their business model from one based on physical assets and brand legacy to one based on data and predictive power. They are in a race to see who can build the most intelligent, most indispensable platform that will lock in their agents and attract top talent from their competitors. So, are they dinosaurs? No. They are kaiju giant monsters, fighting each other with weapons of unimaginable technological power. And the average real estate agent is standing on the ground below, forced to decide which monster they want to side with. Do they join the ranks of a tech-powered giant, tying their business to a proprietary platform in exchange for its power? Or do they try to remain independent, piecing together their own arsenal of AI tools, hoping they can compete with the agent down the street who has $1 billion AI engine whispering in their ear? This battle of platforms changes everything, but it also raises a terrifying new set of questions. In this new world where the brokerage provides the AI that powers an agent's entire business, who truly owns the client relationship? Who owns the data that is generated from every call, every email, every transaction? When an agent builds their entire career on a proprietary platform and then decides to leave, what happens to the digital foundation of their business? Can they even take it with them? Or are they simply a user, renting access to a system that ultimately controls their livelihood? These are the billion-dollar questions that are quietly reshaping the power dynamics of the entire industry. The short answer is terrifyingly simple. Whoever owns the platform owns the data. And in the age of AI, whoever owns the data owns the future. For an agent, this creates a situation that can only be described as a set of digital golden handcuffs. The AI platform they're given is so effective, so integrated into their daily workflow, that leaving becomes almost unthinkable. It's not just about losing access to a CRM. It's about losing the very brain of their business operations. The AI that knows which leads are most likely to convert, that remembers a client's daughter's name from a call 2 years ago, that automatically drafts the perfect follow-up email. That brain doesn't belong to the agent. It belongs to the brokerage. So when an agent decides to switch firms, they're often faced with a brutal choice. They can try to painstakingly export their raw data, a list of contacts, emails, phone numbers, but they lose the intelligence. They lose the context, the relationships, the predictive analytics that made the data so powerful in the first place. They are, in essence, starting from scratch. They've spent years feeding a machine, making it smarter and more valuable, only to realize they were building equity in a house they didn't own. This is a fundamental shift from the old model. An agent's black book of contacts used to be a physical, portable asset. Now their most valuable asset is an algorithmic profile of their network, and it's chained to the server of their employer. This creates an immense, almost gravitational pull, keeping top agents at the big tech-forward brokerages. It makes it harder for smaller, independent firms to compete because they can't offer a comparable AI ecosystem. And it makes it incredibly risky for an agent to strike out on their own. This isn't just a hypothetical problem. It's a strategic moat that these companies are intentionally building. They are creating a walled garden where the tools are fantastic, but the walls are very, very high. But the rabbit hole goes deeper, because it's not just the brokerages who are the new gatekeepers. We have to ask, who is building the AI for these brokerages? It's not Keller Williams or Compass engineers coding these massive language models from the ground up. They are overwhelmingly building on top of foundational models created by a tiny handful of tech titans: OpenAI, Google, Microsoft, Anthropic. This means that the data, the sanitized, anonymized, but still incredibly valuable data from millions of real estate transactions and conversations, isn't just staying within the brokerage's walled garden. It's potentially being used to train the even bigger foundational AI models that power countless other industries. Think about that for a second. The nuances of your negotiation with a buyer in Dallas, the specific concerns a seller in San Diego has about interest rates, the marketing language that works best for a condo in Chicago, all of this becomes grist for the mill. It's fed into the machine, making the global AI brain smarter. This raises profound questions about data privacy and security that we are only just beginning to grapple with. Every email, every text message, every recorded phone call that an agent logs into their AI-powered CRM is another data point. While companies have stringent privacy policies, the sheer volume of this data collection creates an unprecedented risk. What happens in the event of a major data breach? We're not just talking about names and email addresses being leaked. We're talking about the potential exposure of deeply personal financial information, private family details, negotiation strategies, and the intimate contents of conversations that people thought were confidential. The industry has been built on a foundation of discretion and trust between a client and their agent. AI, by its very nature, introduces a third party into that relationship, the algorithm, and we don't have a clear legal framework yet to govern this new three-way relationship. We are in a regulatory Wild West. Laws like GDPR in Europe and the California Consumer Privacy Act are starting to address data ownership, but they were not written with today's generative AI in mind. They don't fully comprehend a world where a private conversation can be deconstructed and used to teach a global intelligence how to better sell a house in the future. Who truly owns the transcript of a call between an agent and a client? Who owns the insights generated by the AI from that call? Is it the agent, the client, the brokerage, or the tech company that built the AI model? The law is silent, and in that silence, tech companies are moving forward at lightning speed. This isn't just an issue for agents. It's a massive issue for consumers. When you hire an agent, you are implicitly trusting them with some of the most sensitive information of your life. The assumption is that this information stays with them, but now it's being processed, analyzed, and stored in complex systems that are vulnerable to attack and are being used for purposes far beyond your individual transaction. The convenience of an AI-powered process comes at a hidden cost: your data. And the terms of service agreement that you scroll past and click accept on is the only thing standing between your private information and the vast, hungry machine of AI development. Now, the counter-argument from Silicon Valley and the tech-forward brokerages is a powerful one. They argue that this data sharing is precisely what makes the AI so effective. To accurately predict market trends, you need a massive, diverse dataset. To build a tool that can instantly identify the perfect home for a buyer, it needs to have learned from the preferences of millions of previous buyers. They claim that by centralizing and analyzing this data, they are creating a more efficient, transparent, and responsive market for everyone. The AI can spot patterns of housing discrimination that a human might miss. It can analyze city planning documents to predict which neighborhoods are poised for growth. It can streamline the mortgage and title process, cutting down on the time and cost of closing a deal. In their view, it's a virtuous cycle. More data leads to a better AI, which leads to better outcomes for both agents and consumers, which in turn generates more data. The privacy concerns, they argue, are managed through rigorous anonymization and security protocols. They believe the immense value and efficiency gained is a worthy trade-off for contributing to this collective intelligence. This presents us with a fundamental dilemma. Do we embrace this new world of data-driven efficiency, accepting the risks and the loss of a certain degree of privacy for the sake of a smarter, faster real estate market? Or do we push back, demanding greater control, transparency, and ownership over our own data, even if it means slowing down the pace of innovation? There is no easy answer. But one thing is certain, the very definition of what an agent is, and what value they provide, is being forged in the crucible of this debate. The agents who understand this new landscape, the ones who see themselves not just as salespeople but as data stewards and tech-savvy advisors, are the ones who will survive. The others risk becoming mere data entry clerks for a machine that is getting smarter than them with each passing day. This forces us to ask the ultimate question, the one that everything has been building towards. In a world where AI can analyze the market, predict prices, and even negotiate deals, what is left for the human agent to do? What will be the skills that matter in 2030 and beyond? And for you as a buyer or seller, how do you navigate this new terrain to ensure you come out on top? The answer isn't that the human agent disappears. The answer is that the human agent evolves. The role of the real estate agent is undergoing the most significant transformation in a century. For decades, their primary value was access. Access to the multiple listing service, access to listings, access to data. They were the gatekeepers of information. But that gate has been blown wide open. Today, information is a commodity, free and abundant. So what is the new value? It's not access, it's insight. It's not data, it's wisdom. Think of it like this: an airline pilot. Modern airliners can largely fly themselves. The AI-powered autopilot can handle takeoff, navigation, and even landing with incredible precision. It processes thousands of data points per second, wind speed, altitude, engine performance, far more than any human could. So why do we still have two highly trained pilots in the cockpit? Because when things go wrong, when there's unexpected turbulence, when a complex split-second judgment call is needed, you don't want an algorithm. You want human experience, intuition, and accountability. You want a captain. The real estate agent of tomorrow is that captain. The AI is their advanced autopilot. It will handle the flight plan, analyzing market data, scheduling showings, generating marketing copy, and processing paperwork. But the agent will be the one in the command seat, interpreting the AI's output, strategizing the negotiation, managing the complex human emotions of the buyer and seller, and navigating the turbulence of a bidding war. So, what are the skills that will define the successful agent of 2030? First, AI literacy. They won't need to be coders, but they will need to be expert users. They'll need to understand which AI tools to use for which task, how to prompt them for the best results, and how to spot when the AI is getting it wrong. They will be curators of technology, building a personal tech stack that gives their clients an edge. Second, data interpretation. The AI will provide a mountain of data. The agent's job will be to find the story within it. They'll look at a predictive pricing model and not just see a number, but understand the why behind it. They'll see that the AI is flagging a price increase because of a new school zoning law, or a planned light rail extension that the average person hasn't heard about yet. They translate raw data into actionable street-level strategy. And third, and most importantly, deep emotional intelligence. This is the one thing that cannot be automated. Buying or selling a home is not a purely financial transaction. It is one of the most stressful, emotional, and significant life events a person will ever go through. An AI can't look a first-time homebuyer in the eye and calm their fears. It can't act as a therapist, a project manager, and a fierce advocate all at once. The future-proof agent will be a master of human connection, a trusted advisor who provides not just market analysis, but reassurance and guidance. They will be the human anchor in a sea of technology. Now, for you, the buyer, the seller, the investor, how do you navigate this new world? The answer is to become a savvy consumer of both technology and human expertise. Embrace the tools that AI offers you. Use the property valuation sites, the AI-powered search portals, the market trend analyzers. Do your homework. Empower yourself with data, but understand the limits. An algorithm doesn't know the feel of a neighborhood at dusk. It doesn't know that the seller is emotionally attached to the home and will respond better to a personal letter than a lowball offer. Your strategy should be to find a human professional who is also a master of the technology. When you interview an agent, your questions need to change. Don't just ask, "How many homes have you sold?" Ask, "What is your AI strategy? Which predictive analytics platform do you use to price homes? How do you leverage AI to market my property to a targeted audience of buyers? Can you show me an example of an AI-generated virtual tour you've created?" The agent who can't answer these questions is living in the past. The agent who can is your partner for the future. You are hiring a pilot, not just a passenger. Let's paint a picture of what a transaction might look like in 2032. A young couple, let's call them Maya and Ben, are looking for their first home. They don't scroll through thousands of listings. Instead, their AI assistant, which understands their financial situation, their work commutes, their desire for a home office, and even their aesthetic preferences from their social media, has already identified the top 3 properties in the entire city for them. They don't drive to an open house. They put on lightweight augmented reality glasses and do a complete virtual walkthrough from their couch. Their AI overlays data in real time. As they look at the windows, they see a pop-up showing the estimated annual heating and cooling costs. They glance at the roof, and the AI displays its age and the last inspection report. They love one of the homes. Their agent gets a notification. The AI has already analyzed the property's history, the seller's motivations based on public data, and run 10,000 negotiation simulations. It recommends an opening offer, not as a single number, but as a strategic package with 3 specific concessions that are statistically most likely to be accepted. The human agent reviews the AI's recommendation. She sees the logic, but she knows the listing agent personally. She knows that agent's client is more concerned with a quick, clean close than squeezing out every last dollar. So she tweaks the AI's strategy, advising Maya and Ben to offer a slightly higher price, but with a faster closing date and no inspection contingency. She uses the AI's data, but filters it through her human experience. The offer is accepted. The AI then takes over the logistics, automatically scheduling the appraisal, coordinating with the title company, and guiding Maya and Ben through the digital paperwork. The entire process from discovery to closing is faster, more transparent, and less stressful. The AI handled the science, the human handled the art. This is the future we are building. A future where technology removes friction and empowers consumers, while human professionals are elevated to do the work that truly matters: the strategizing, the advising, the connecting. Of course, this utopian vision isn't without its challenges. We must be vigilant about algorithmic bias, ensuring that AI doesn't perpetuate historical patterns of housing discrimination. We need robust regulations around data privacy, protecting the sensitive financial information that fuels these systems. And we must manage the economic disruption for those whose jobs are fundamentally changed. These are not small problems, but they are solvable. The story of AI in real estate is not a story of replacement. It is a story of augmentation. It's about creating a centaur, the mythical creature that was half human, half horse, combining the intelligence of a man with the speed and power of a beast. In this new market, the winning combination will be the human agent and the AI assistant, working together to create something more powerful and effective than either could be alone. Technology is a tool, and like any tool, its impact is determined by the hands that wield it. AI is giving us the power to build a real estate market that is more efficient, more transparent, and more accessible than ever before. It's a chance to spend less time on paperwork and more time on people. A chance to replace guesswork with data-driven certainty. A chance to turn one of life's most daunting processes into one of its most exciting. The future of real estate isn't human versus machine. It is human supercharged by machine. And that future is arriving now. We've covered a massive amount of ground in this series, from the core of how AI works to how it's reshaping the very foundation of the American dream. But the conversation is just beginning. What part of this AI revolution excites you the most? Or what part has you the most concerned? Drop your thoughts in the comments below. I read every single one. And if you want to stay ahead of the curve on how technology is changing our world, make sure you subscribe and turn on notifications. We break down these seismic shifts every single week, giving you the knowledge you need to thrive in the future. Thank you for joining me on this journey. Now go out there and build your future.